Good morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-hosts Emily Parker, CoinDesk's Executive Director of Global Content, and the TIE's Director of Content, Lawrence Lewitton. Now, before we get into the news today, we got to take a look at what's going on in those markets, starting with Bitcoin. The CoinDesk Bitcoin XBX price index is at 26,952. Every time we look at these charts lately, I feel like I have deja vu. Bitcoin slipped below 27,000 early this morning, struggling to recover from that slight drop. Let's take a look at what's happening with Ether. The CoinDesk Ether price ETX index is at 1,865, following suit. And let's see if anything different's happening with DeFi. The DFX CoinDesk's DeFi index is at 106, doing a whole lot of nothing. Lawrence, I look forward to the day when there is some excitement in the markets again. I do. Nope. I really.
Nope. Stability. If you are serious about crypto being used as a medium of exchange, you want a little bit of stability, price stability. But yeah, I could see those who want it as a store of value, of course, want it to go up. We have something at least that might help with some stability here, and that is a budget debt deal in Congress. Kevin McCarthy, I'm always surprised can do anything, was able to get it done with the centrists, if you will, on both the Democratic and Republican side, and the fringe, the kook tail end of everything, kind of saying no, we don't like it. And if both the extreme right and extreme left hate it, it's probably okay. The fact that he got it done, and Joe Biden showed up and actually negotiated, so that's exciting. And here we have a deal, which means the Fed might have a little bit of wiggle room with raising rates, I think, because now it doesn't have this sort of risk premium on their bonds that happen on bonds that happen that would have happened if there weren't a deal. So they could say, oh, well, there's some room for us to raise rates a little bit more just because of the data.
Lawrence, this is another story that has just been so unexciting as of late. I think that everyone expected this to happen, right? Because what else could have?
It's exciting to see people upset, I think, especially the ones who did get upset. So I think it was exciting. I don't think it was unexciting.
Emily, what do you think? We spoke to Congressman Warren yesterday. He, of course, said that he was going to vote yes on the bill. Were you surprised by this morning's results?
Not particularly, and I have to sort of agree with Lawrence here. Be careful what you wish for excitement in the crypto markets. We've had a lot of excitement in the crypto markets, and it's often not a very good excitement. But yeah, I think, look, the bottom line here is that there doesn't seem to be a super clear narrative, at least over the short term, for Bitcoin and the debt ceiling. I mean, we've just kind of seen like a bunch of different reactions. So I don't think there's a really clear short-term narrative in terms of how debt ceiling affects crypto prices.
All right. Well, my need for excitement has been suppressed. We wait for another day to see more stability in the markets, hopefully.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
So I'm very happy to introduce this very important topic. We have a historic day. Hong Kong's Security and Futures Commission will begin accepting applications for crypto trading platform licenses on June 1st, which is today. Joining us to discuss is King Lung, Invest HK Head of Financial Services and FinTech. Welcome to the show, King. We're very happy to have you here.
Well, thank you for having me. Yes, today's a big day.
Yeah, it is a big day. Well, I guess the day already happened in Hong Kong. It's a big day here later in the US. But let's just break this down simply. So just to understand, a lot of our viewers are probably not following what's happening in Hong Kong that carefully, and also it is a little bit complicated. So if you could just explain to us as simply as possible, what is happening today on June 1st? What exactly is the change that is taking place today?
Well, simply put, three key takeaways. Now, Hong Kong has been really advocating the digital assets regulatory regime since the year 2018. So this is nothing new. However, the second key point to take away is that we've been working very closely with private sector digital assets leaders in the past many months to understand what would be needed for them to have a conducive environment to do business. So naturally, after hearing all the feedback, for example, one of the requests from the market is to allow more participation from retail investors. So the significance of today's launch of the enhanced regulatory regime is to open up to the licensed exchanges to allow the retail investors to participate. So this is why this has been capturing a lot of media attention.
Okay, thank you. That's a nice explanation. So let's just go into that a little bit deeper. So how many exchanges are currently licensed in Hong Kong? And if you could just sort of explain the situation now and what's expected to change after June 1st.
Well, the short answer is, as of today, we only have 2 licensed exchanges. Now, and this is because over the past few years, we've been taking a very market-friendly approach by allowing opt-in. So exchanges can opt in to apply for a license, in which 2 of them did. For the other operators, they've been operating without a license. However, with today, enactment of the enhanced regulatory regime, the operators that have been operating in Hong Kong, they'll be giving, before June 1st, they'll be giving the transitional period of 1 year to continue to apply for the enhanced license. So in meantime, they can continue to operate. However, for firms or exchanges that have not been operating in Hong Kong prior to June 1st, 2023, and from this point onwards, they can no longer operate in Hong Kong. Otherwise, there'll be a criminal offense. So they have to apply for a license. Until they get the license approved, they cannot operate.
Okay, so thank you. So I just want to clarify something about retail though, because there was retail trading and investment happening in Hong Kong. It just kind of wasn't official, right? Is that correct? Like my understanding is that there was retail trading in Hong Kong, but it was more sort of like OTC, over the counter, or like Bitcoin ATM. So it was, I think some of the media was a little bit confusing because it said retail trading is coming to Hong Kong, and people who know Hong Kong said, wait, there was already retail trading in Hong Kong. Is that a correct assessment? So my understanding now is sort of retail is being brought under the licensing regime as opposed to retail is being introduced to Hong Kong. Is that the correct way to frame it?
Correct. As I just mentioned, we've been taking a market-friendly approach with the opt-in arrangement before. So therefore, the retail investors, they could participate in the crypto or digital assets trading. Now, by effective June 1st, so as of today onwards, basically only the licensed exchanges will be allowed to offer these services legally to the retail investors in Hong Kong with certain guardrails.
So exactly what retail investors are we talking here? Are they going to be Chinese nationals, or are they only Hong Kong residents? Can they be non-citizens who are residents of Hong Kong? Are they able to open accounts, or who are the guinea pigs in this whole experiment?
Well, this is a great question. I guess simply put, let me just put the customers, retail customers, in 2 buckets. So naturally, for the Hong Kong retail investors, of course, after meeting certain suitability tests, is essentially put forward by the licensed exchanges. Then, for those that meet those suitability tests, then under certain guardrails, then they'll be allowed to trade on the licensed exchanges. Now, for folks who are outside of Hong Kong, just now you mentioned like mainland China and other jurisdictions. So, of course, the principle from our regulator, the SFC, Securities and Futures Commission, is that we have to respect the law and regulations of the various countries. So in the case of mainland China, because cryptocurrency is still banned in mainland, so therefore we are respecting that. So naturally, for licensed exchanges in Hong Kong, they will have to basically not allow or open this up to mainland. So the way to do it is to check the IP address, and things like that to make sure that the license changes comply to the law. Now, for folks from other jurisdictions, for example, in Southeast Asia, maybe in EU, and so forth. So basically, the license exchanges, they also have the obligation to check and comply with the regulations of the countries where the incoming customers are from.
Can a mainland China citizen use it while they're in Hong Kong, or that no, because they're a citizen of China, correct? They cannot use it even if they're in Hong Kong?
Well, I think they are, again, Hong Kong is part of China. And over the past many years, a lot of mainland Chinese would emigrate to Hong Kong. They got Hong Kong permanent residency. So they're just like all of us. So naturally, for those mainland Chinese retail customers who are Hong Kong citizens, then yeah, and the funds are in Hong Kong, then because Hong Kong has the free flow of capital anyway, so then they can participate.
Yeah, on the topic of regulation, you brought up the Securities and Futures Commission of Hong Kong. Was the regulatory framework based on anything we've seen come to life internationally?
Well, again, I'm not a lawyer, so I don't want to make very specific comments. But let me just talk about the principles after talking to the leaders from SFC. Now, at the end of the day, Hong Kong is an international financial center, and we play by international rules. So naturally, our leaders and the team responsible for the design of the virtual asset service provider regulation, they work very closely with the counterparts in other markets. Again, the UK, the Switzerland, the Japan, and so forth, to make sure that they have enough communications so that, it's not like Hong Kong wants to be uniquely different. Only we have certain rules. As a matter of fact, I think based on the inputs I've been hearing from the SFC folks, they are really trying to align with the thinking with our jurisdictions so that, certain players over time can have the regulatory arbitrage. So in short, we are playing by.
Thank you. No, I just have one sort of final question, which is kind of a big question, which is, why is Hong Kong doing this, right? If this was a few years ago, it would be totally make sense. But right now, we're here in the United States, and there's a lot of backlash towards crypto. Countries like the United States and Hong Kong, you could argue, are moving in actually opposite directions because Hong Kong is sort of cautiously welcoming the crypto industry. The U.S. is not so welcoming, right? So I guess my question is, clearly somebody, Hong Kong regulators, Hong Kong government decided that it is beneficial for Hong Kong to have crypto in Hong Kong in some kind of way. And, there's a lot of media now about Hong Kong emerging as a global crypto hub. So my question is, why? Why does Hong Kong want the crypto industry? What is the benefit for Hong Kong to have crypto be a crypto hub?
Well, again, I'm glad you asked this question. In fact, it's something that we've been trying to get the message across to as many people as possible. Now, the short answer is, again, we are not talking about just crypto. Again, we have to appreciate the fact that the market cap of cryptocurrencies are really worth just 1 trillion, 1.5 trillion. It's not that big. Actually, what we are interested in is the tokenization of all the other assets that can empower the real world economy. So therefore, we talk about the tokenization of bonds, real estates, intellectual properties, like illiquid PE funds and things like that. And if we frame it, we're talking about hundreds of trillions of market size. And this is what our government leaders are really going after. So in fact, I think the CEO of BlackRock, Mr. Larry Fink, was interviewed, I believe it was early part of December last year. So BlackRock, they have come out openly to talk about their assessment of the impact of tokenization of assets as the future of finance. And as an IFC, Hong Kong definitely would like to remain at the forefront of financial innovation. And we see the opening up to tokenization of assets as a way for us to really jumpstart and help us to shift gear to the next higher gear of our financial services sector. So this is really about the bigger picture as opposed to just a tiny bit of cryptocurrencies.
King, thank you very much for joining us this morning. We look forward to seeing how Hong Kong progresses towards their goals. That was King Lung, Invest HK Head of Financial Services and FinTech. And don't miss our Twitter Spaces on this topic right after First Mover. Emily, you are going to be taking part in that. What can we expect?
Yeah, this is a Twitter space just about exactly what's happening on June 1st in Hong Kong. Please join 10 a.m. One caveat is it is in Chinese. So if you already speak Mandarin Chinese, or if you can learn Chinese in the next 40 minutes, come join at 10 a.m. And join our Twitter space. It's fun. CoinDesk Chinese is hosting this.
Now you have to announce it in Chinese, in Mandarin. Please, can you?
Yeah, we'll go learn some Chinese on this break. Coming up,
we'll take 40 minutes, yeah.
Yeah, we got 40 minutes to learn. After this break, we'll take a look at the debate around Elon Musk and free speech on Twitter. We'll be right back.
I can do it in Ladino.
Welcome back to First Mover. Twitter has been criticized for complying with over 80% of government takedown requests under Elon Musk's leadership, according to multiple media reports. This comes after Musk called himself a free speech absolutist. Emily, you are our expert when it comes to global news. You have your thumb on the pulse of a lot that's going on worldwide. Tell us what's going on here and why this is such a hot topic.
Sure. So this is a really important topic, and quickly, why we're talking about it on the show, there's been a lot of talk about the need for decentralized, censorship-resistant social networks. So this clearly fits into that theme, but we'll get to that later. So basically, yes, as you said, Elon Musk and Twitter have been widely criticized for complying with government censorship requests internationally, and there was recently a lot of controversy right before the Turkish elections when Twitter restricted access to some tweets. Now, it's worth noting here that this has always been the case. You know, this is what happens when you have companies like Twitter operating overseas. This has been true for, Google and Facebook. You have governments going to them with requests to take down content or to restrict content. Now, Musk has replied saying that he basically had no choice but to comply with these requests. Now, okay, there's a lot to sort of tease out here, but I think the real problem here and why it's so controversial is that Musk has also positioned himself as a quote unquote free speech absolutist, particularly within the United States context, and has really positioned himself as his takeover of Twitter is to kind of like, create true, complete free speech and be totally anti-censorship. So yes, it does raises a lot of questions about, the choice to comply with these government requests abroad. And, again, Musk is saying that he had no other choice and that he didn't comply with these censorship requests, then Twitter might be taken down. But if you look sort of at the history of Twitter, you see that Twitter actually does have a choice and has defied government requests in the past.
What pops into my head is if a platform can be so compliant in this way to take down content at the request of governments, what else might they do at the request of governments? Might they give up data? Might something else happen? Is that a worry that you've seen people express in the discourse here?
Absolutely. So this is actually, that's a great question. And this is such a long story. I mean, before I was kind of in the crypto world, I was looking very specifically at this, looking at some US tech companies and kind of their operations in markets like China, for example. And companies, like Google and Microsoft and Yahoo, they got into all sorts of trouble in the Chinese market for exactly this reason. Because what can happen is when you are operating in an overseas market, you have to sort of comply with those local laws and regulations, which means that a foreign government can come to you and they can ask all sorts of things. They can ask for takedown requests. They could theoretically ask for data, or they could actually ask for information about somebody so that they can arrest them, right? So this creates like all sorts of problems. So when Elon Musk first took over Twitter, this immediately got on my radar as this is going to be something that he's going to have to deal with because, again, he's positioning himself as a free speech absolutist, which is very difficult to do when you're operating in markets that have completely different legal structures from that of the United States. And what's telling is that Musk also said in a different tweet, which kind of contradicts this sort of free speech absolutism concept, that he would comply with local laws and regulations, but there are some local laws and regulations overseas that are not necessarily pro-free speech. And I think we're starting to see this now.
You alluded to this at the beginning here. The conversation about decentralized social platforms kind of enters the chat when we talk about the social media platforms and them complying with different governments and laws. Is decentralized social a solution to this? Or is there a way that governments are still going to be able to kind of meddle with decentralized social platforms?
Yeah, again, another great question. So there's a few now kind of, I wouldn't call them competitors yet because nobody is really kind of yet chipping away at Twitter's massive network. But, you have Nostr, for example, you have Blue Sky, and both of them are positioning themselves as trying to be decentralized, right? So yes, I mean, I think there is a world in which you could create a social network, which it is harder for a government to go to one sort of like central company and say, we want to take this down. And I think that's ostensibly what these competitors are trying to do. The problem is, and we're seeing this now, despite all of the criticism of Musk's Twitter and despite all of the anger at Twitter, Twitter is still quite dominant because of its network effect. So that's been the problem up till now, is that these decentralized social networks have not been able to kind of just get the same kind of market share and just get the same network effect as these players like Twitter. And until that happens, I don't think that they're going to be able to chip away at them. But yeah, I mean, look, we've been talking about this now for a long time. There are people trying to do this, but I do think that these government censorship requests highlight the need for alternatives to the current model.
That's exactly what I was going to say. All the users are on these centralized platforms, Facebook, Twitter, Instagram. I think the industry really needs to close that gap, figure out how to get people to, first of all, understand decentralized social and then start using them. I don't think it's going to be an easy feat. Emily, always such a pleasure hearing your perspective on what's going on around the world. We should note that CoinDesk reached out to Twitter for comment, but we haven't heard back.
And Bitcoin notched its first monthly loss since December, as crypto markets have struggled in recent weeks amid uncertainty over the U.S. debt limit and inflationary concerns. Joining us to discuss is head of index research at our very own CoinDesk Indices, Todd Groff. Welcome, Todd.
Thank you. Thank you for having me.
Glad to see you. So you noted that in May, it was a relatively muted month for cryptocurrency price action. Unpack that for us. Why muted?
Sure. So I think in just broad context, anytime you have an asset that has a significant volatility, such as cryptocurrency, any real monthly move that is under, say, 5% or less, in the context of the risk of the asset class, is relatively muted. Bitcoin really down about 3 to 5%. Ether flat-ish. The broad CMI as well was down about 3%. But in the context of how much these assets can move over a historical basis, it's really a bit of a choppy month, really. What we've also seen is volatility in the space. We've seen this for the last two months or so, has really sort of diminished as we have been caught in this range-bound market.
Historic volatility, not implied volatility, correct?
Yes, exactly. Historical. Yeah, we just really post Silicon Valley Bank collapse and the repricing of interest rates for cuts later this year. That was really the last big significant move, which pushed Bitcoin up towards 30K. Now we're post Chappella. That was really helpful for Ethereum and that narrative, that upgrade. But now we're really looking for that next big narrative to move higher. This month, actually, we did have a repricing of interest rates to remove those interest rate cuts post SVB. So at least in a positive sense, we have repriced interest rate expectations to not be so dovish towards the end of the year without any sort of big market correction lower. So that has been positive. But that repricing of interest rates higher has been it's been a bit of a headwind, really, for prices higher. So as a result, we sort of balanced out, and as you know, it's chop as a result in May.
I want to talk about the winners and losers. So you took a closer look at CoinDesk Market Indexes. Select the monthly performance by token leaders and laggards. Tell us who won, who lost in May.
So the winners were Renderer and Litecoin. This is a smaller section
Litecoin.
of CMI. Yeah, on a relative basis, these are the CMI Select Index is really our large cap investable portion of the CMI index. And Renderer, at some level, Renderer is ultimately a decentralized network of GPUs. And what we've been seeing with NVIDIA, with AI, GPU clouds, it's funny because GPU clouds at one stage were being used, and still are, for Bitcoin mining. And now we've seen that the narrative of GPUs broadly repurposed to be these big AI clusters. And Renderer effectively is a decentralized AI cluster. There's no surprise that on a relative basis, it outperformed given the buzz and hype over ChatGPT, all these LLMs. That sort of caught part of that NVIDIA bump up higher. And then on the detractor side, ApeCoin, Chili's, just culture and entertainment, digitization sectors broadly. That was on a relative basis. Also, what we found is generally when markets are really range bound, people take side positions and meme coins. There's meme coin season with Pepe having gone up to 1.6 billion in market cap at the top. Now we're back down to about 500 million. So that was and Pepe was basically a May phenomenon, almost completely bookend in May. So when the markets aren't really broad markets aren't really trending higher, then we see that. It's a ripe opportunity for crypto investors to take some side bets into lower liquid tokens such as memes,
and a little bit of silliness too.
Absolutely, no. It was definitely an interest and a shift towards sort of this the meme coin. It is silly. It is a bit of a game in May, and so we've seen that sort of come to be tamped back down against the broader market.
Todd, thank you very much for sharing with us this morning. That was Head of Index Research at CoinDesk Indices, Todd Groth. All right, we've already gone to Hong Kong. Coming up after the break, we are going to take a look at the state of crypto and innovation in Nigeria.
Welcome to CoinDesk TV, your 24/7 news source in the Bitcoin, blockchain, and digital asset space.
People use digital assets for hundreds of reasons.
Every single asset in the world is going to be digital.
I feel like Gen Z could really take this space and run with it.
What's going on here, guys? What are we doing?
We're breaking this news on your channel.
There is so much interest in getting into crypto right now.
I don't foresee any glass ceiling anytime soon with this.
Here's our CoinDesk Bitcoin News Roundup.
It's great for the world. It's very bad for Bitcoin.
This is amazing. I want one of these. I know there's only 250 of them.
Tune in 24/7 to CoinDesk TV.
Welcome back to First Mover. Nigeria's government recently approved a national blockchain policy as part of the country's effort to transition to a digital economy. Joining us now to discuss is Nestcoin CEO and co-founder Yele Badamosi. Good morning, Yele.
Hey, thanks for having me. It's good to be here.
It's great to have you. Let's get right into it. This approval comes on the heels of a cash crisis in Nigeria. Give us an update on what's going on in Nigeria. Any updates on the cash crisis? How are Nigerians receiving the CBDC?
Yeah, it's been an interesting couple of months. We're just coming off the back of a cash crunch in February. And, before the elections began, some of the sort of news in and around the fact that the old notes were going to go out of circulation were kind of rescinded. And so things have kind of calmed down a little bit. Interestingly, a couple of days ago, we actually had a report from the IMF about the latest on the CBDC. Unfortunately, only about 98.5% of all the created e-wallets for the e-Naira have actually have not done any transactions till date. The central bank mentioned that this is probably due to the fact that the banks have not been as supportive because they don't want customers to move into the e-wallets and sort of stay in their stay as bank customers. We think that, especially with the new presidential candidates coming in, we would see more policies that maybe encourage the fintech companies and even some of the crypto players to be the ones sort of championing the e-Naira. So we're pretty excited about what might happen over the next couple of months, and also there's been a lot of progressive and more positively higher sentiments or positive sentiments from some of the policies that we're seeing from the government as well. Although the restrictions on crypto exchanges having access to bank accounts have not been lifted yet, but some of the conversations happening with policymakers and statements by the incoming or by the new presidential government, bodes very strongly for the future of crypto in Africa's most populous country, Nigeria.
What has been the impact of this CBDC on just kind of general crypto use in Nigeria? Like, do you feel like it has, as some proponents will say, gotten people more exposed to digital assets or more curious about digital assets, or just like no, or the opposite, or nothing at all?
Right now, there's not that much sort of adoption, between the retail or sort of, banking sector at all. So I don't think we've seen the kind of impact one will have expected when it comes to the, I guess, like more awareness or adoption. And I mean, one thing to note is that digital assets in African countries such as Nigeria are very popular, right? So from an awareness perspective, if you spoke to, 100 random people on the street, 50% of them will have heard about Bitcoin or some digital assets in some way, shape, or form. Not everybody might have a positive experience. Unfortunately, people are still exposed to scams, primarily because a lot of digital asset activity in Africa is driven in peer-to-peer channels. But the awareness level is already really high, right? The main thing is just how do we go from the speculative narrative that, in my opinion, has come from trading crypto assets and was one of the initial use cases to, a future that is more focused on on-chain financial services, which is building financial services, creating financial access for the people that need it the most. It's not quite the same narrative as banking the unbanked, but the idea is that your geographical location should not determine the quality of financial services that you can have access to.
That was a great transition to talk about your company, Nestcoin, who lost a significant amount of its $6.45 million raise during the FTX collapse. Right before this interview, you said, this is one of the first times that you can breathe and see a future for the company. Tell us about what's going on.
Yeah, I mean, it's been a, very challenging couple of months. But I would say the last 2 or 3 months have been definitely a lot more positive. The FTX sort of fallout was a deeply unfortunate one, and it affected not just us, but hundreds of thousands of retail users who were probably first time in the crypto space, and that has definitely shaken confidence about the role of exchanges and the future of crypto on the continent and beyond. At the time for us, it was very important that we communicated openly and transparently with our community, our investors, and it was encouraging to see the level of support that we got from the ecosystem. And we had to make some very difficult decisions in terms of like our team. And then, we were able to really focus on what we felt was like our renewed mission and purpose as a company. For me, the big idea here was that we don't want any individual or business to ever be in the same position that we've been in. I actually think that traditional finance is a lot better than centralized crypto. But people have gone towards like centralized platforms primarily because there is no, it's really difficult to use non-custodial products and services. I think a lot about like Elon Musk and Tesla in terms of people didn't start using Tesla because they wanted to do the morally right thing for the planet. People chose Tesla because it was just a better car. It was a better car. And for on-chain and non-custodial products to become mainstream, we have to build things that are easy for people to use. And that's been like our renewed focus at Nestcoin. We recently launched a wallet called Onboard that makes it super easy to, hold your assets in a completely non-custodial manner whilst making or maintaining sort of like a user experience that mirrors a traditional kind of financial application or product. And it's been quite exciting to see the traction that we've gotten in the last couple of months, doing tens of millions in transaction volumes, and excited to see what the future holds for us.
Just quickly, you mentioned earlier that a lot of the use in Nigeria was speculative. That's true, obviously, in many parts of the world. But I'm just curious, have you observed any real use cases for crypto in Nigeria? Because people might not know about.
Yeah, I mean, I would actually say, so when I said speculative, I meant like crypto as a whole. I would actually posit that in Nigeria and a lot of African countries, we're seeing people use crypto for real world use cases, not limited to sort of wanting to hold your wealth in sort of less volatile government or fiat currencies across the continent, or using it as a medium of exchange to convert local currency into USD. We have businesses and individuals primarily moving a lot of capital through stable coins, both from Africa to Europe, or to Africa to Asia, and Africa to the US. So those two use cases, in terms of, I'll probably even say, like, from a just money movement perspective, stable coins has definitely been, it's definitely found sort of product market fit, and is a huge use case right now.
Any stablecoin in particular, or is it very Tether dominated, or are there other stablecoins that are used widely?
Yes, I would say USDT is definitely the largest. Something that most people don't know globally is actually how popular Tron is in the market, in terms of like the Tron chain. And that's just because before the rise of L2 solutions like Optimism and Arbitrum, it was very difficult to use Ethereum, right? Like, people are not going to spend $6 to $12 to move $1, right? That doesn't make any sense. And so when you had low cost chains like Tron, or the BNB Smart Chain, you saw kind of more adoption in that phase. But something that I'm really excited about is to see kind of different layer 2s or low cost chains sort of pop up, and we're seeing increased adoption in USDC, BUSD, and the likes.
Yele, thank you so much for joining us this morning. I guess this afternoon for you. That was Yele Bandamosi, CEO and co-founder of Nestcoin. That's it for First Mover. We'll see you tomorrow at 9 a.m. You're watching CoinDesk TV.